Hey guys, what's up? Alec back with the daily stock market, and look at that. We have many stocks down. Huge amount on Friday. Rocket down 10%. Nvidia down 9%, which is really interesting. We've seen a lot of volatility coming from Nvidia. We've even seen Nvidia as high as $192 per share just earlier this month, and then going down to $170 per share, rising up 10%, falling 10%, rising up 5%, and then falling another 10% or so. So we're going to be diving into Nvidia. We're also going to be going over Apple and many other big tech stocks like Amazon, which is down 4%, and Facebook, which is down to $160 per share, sitting at a multi-year low, almost at a 5-year low. So make sure you hit subscribe with post notifications on, like this video before we jump right into it. Now let's start off quickly with Meta Platforms or Facebook, and then we'll jump into Apple after this. So we see a 5-year low at $125 per share, but that was definitely an outlier. A multi-year low is closer to $160 per share, which Meta Platforms is sitting at right now. It looks like that it has a pattern where it's following a channel just in this last 3 months here since June, and it's been following it pretty closely. So it looks like it's at the bottom of a support right now. It'll be interesting to see if it can make a lower movement, and because it's hit off this support 1, 2, 3, 4, almost 5 times or more, so it should be really weak now, implying that it could make a lower movement. If it starts bouncing back a little bit higher into this range here, could be a good indicator that Meta Platforms could at least bounce back to $175 per share on a short-term swing trade or call option. However, I'm more interested in the long term on Facebook, because I think the peak at 378 is not the all-time high that Facebook will ever experience. I think even if it takes 2 years, 3 years, Facebook will definitely bounce back. And if it gets to even $320 per share, that will be 100% return on investment from $160 per share. And if I can get 100% return on my investment, even over the span of 2 to 3 years, that's looking pretty good. So that's my goal for Facebook or Meta Platforms, is to hold for 2 to 3 years and see over 100% return on your investment from $160 per share. Now, obviously, I'm just dollar cost averaging in. You can see I have an average cost of $165, and I have 10 shares. I'm pretty heavy in Facebook, and I want to get even heavier if we can get closer to $155 per share. I'll probably buy a large position at $155 per share, so I'm keeping that price point locked in. And then even if we see lower, like $135 per share, $145 per share is also when I'll probably be making bigger moves on the swing trade / long-term investment on Meta Platforms. And remember, that 100% gain to $320 per share price target could come sooner than 2 to 3 years. That's just my goal. It could come in the next 6 to 12 months. I don't think that'll happen, but it's definitely possible with how the stock market is working. Now, moving on to Apple. If we pull up a yearly chart, they're actually up 10% on the year, surprisingly. Okay, they've peaked many times at around $180 per share, which we saw in the past, $175 per share. We decided to take a put option out on Apple. It's been paying out so far. Put option could still be a good indication for Apple down to around $155 per share. I think that's a pretty good price target, $156 per share, to start taking profits. We might even see Apple open up lower on Monday. However, if we see them open up higher on Monday, that could be a good idea, and I might be taking a put option out on Apple if we see them open higher on Monday and continue into Tuesday. That could be a good idea. If you want more real-time updates of what I'm buying exactly, what expiration dates, what put option, call options, and everything in between, make sure you message me on Instagram. I have a close friends list where I post all my buys and everything in between. And right now I have the wait list going on. I closed the signups because we have too many people signing up all at once. But I have the close friends list wait list. So message me on Instagram to get on the wait list. You'll be one of the first people to get on the close friends list when I open signups back up. Now over 1,500 students on the program, over 600 positive testimonials. If you want to read some of those positive testimonials, check them out on the highlight section of my Instagram, by the way. Now, Apple, for long-term investing, I really want to see them closer to $135 per share or under $135 per share. You can see I'm dollar cost averaging in. My average cost currently is $159 per share, but if it gets lower, then I'll keep buying. I'm just buying Apple for long term. I think they're one of the best investments for long term, especially if we can get them under $150 and closer to $135 per share. So those are my price alerts on Apple. Now pushing on to Amazon, which is down 4% on Friday. And if we pull out to a 1-year chart, unlike Apple, who's up 10% on the year, we have Amazon down 21% still on the year. And we have a 1-year low closer to $103 per share. So the question is, can Amazon fall another 15-20% and go closer to $105 per share? And I think that they can. There's no guarantees. That's why I'm dollar cost averaging in to Amazon as well. You can see I have $20 per day in Amazon. We have 5 shares. My average cost is $124, but I want to get that average cost under $100 per share. So if we see Amazon under $100 per share or even at 105, you'll start seeing me buying a lot heavier on Amazon stock. Okay, this is another stock I want to be a part of for the long term. They're a $1.3 trillion market cap, and I don't think that's a peak for Amazon. I think they're going to keep growing and growing over the next couple years, and over the next 5 years is looking very good for Amazon. That's why I want to be along with the ride on Amazon. Now, this was an interesting article on Amazon where Amazon is headed in healthcare after Amazon Care failure. When Amazon announced plans, you can even see CNBC even makes some typos sometimes. It says plants. When Amazon announces plants, it's obviously plans. When Amazon announced plans to acquire One Medical earlier in the summer, it seemed likely that something had to give, either One Medical brand or Amazon Care. Amazon decided to shut down what it had been on a high-profile health startup inside its own operation, whereas its retail drug acquisition PillPack was folded into Amazon Pharmacy. And with reports of Amazon now bidding on Signify Health, the internet retail giant seems to be more in a buy than build mood in healthcare. So remember, Amazon is going to continue to build over the next years, and I don't think they have any plans of slowing down anytime soon. Okay, so now let's talk about Nvidia, which is down 10% on Friday. Huge downward movement, and on the past year, they're down 26%. And from highs of $330 per share, we still have them down 50%. So are they a good long-term investment? We see a long-term support, a multi-year support around 135. So I think it's definitely possible to see Nvidia under $150 per share once again. So I have price targets at around 150, 145, 135. To be buying a little bit heavier in Nvidia. Now you can see that my average cost is $166 per share, but I'm just dollar cost averaging in for the long term because I also believe in the company over the long term, and they're down significantly from highs over 50%. So I think the Nvidia, even if it's a long-term hold 3 years down the line, I think they'll also be at all-time highs once again. Now, $500, $600 isn't too big of a position for me. I want to actually triple to quadruple that. That's why I'm waiting with my price targets closer to 135 or under 150 to be buying much more. And that's why my dollar cost average is only at $5 per day, because I'm not doing it too aggressively right now. However, if we see Nvidia under 150, closer to 135, I'll crank up my dollar cost average recurring buy per day, because typically I do my DCA as an everyday thing. I'll probably get that closer to $20 per day if we see it closer to 135. Their company I definitely want to be a part of for the long term. AMD is also one that we have to do a deep dive on the channel, so make sure you're subscribed with post notifications on so you don't miss that AMD video when it comes out. And the last one that we'll be talking about today is Netflix, ticker symbol NFLX. down around 5% on Friday. And if we pull out to the year, they're still down 60% from the year. And from all-time highs, they're down around 70% with a 52-week low and a multi-year low of 175. Okay, so a 5-year low is basically 190 to 175, and that's where my price alerts are set. Under $200 per share, I think is a great place to be buying Netflix. Now, there's no guarantee that Netflix will get to new all-time highs once again. For Netflix to get to new all-time highs, that would be around a triple or 300% gain on your money, which would be absolutely phenomenal. So that's why a lot of people are investing in Netflix right now, and why a lot of people are interested in Netflix, because they are a big tech stock that still presents a lot of opportunity. Obviously, yes, there is a lot of risk, but the risk versus reward situation for Netflix is playing out a little bit more on the reward side, under $200 per share, especially if you can get in at that price. You can see my average cost is $210. I want to get that closer to $190 for my average cost. That's why my recurring buy is only $5 per day. Want to get that a little bit higher to $20 per day once we get under $190 again. And I'll probably buy a few shares if we see $175 to $190 per share once again. I do believe in Netflix for long term. They're personally my favorite streaming platform, and I like to invest in companies that I personally like myself. You know, I have HBO, I have Hulu, I have Disney Plus, I have, you know, all the streaming platforms, but if I had to cancel every single one and only keep one, it probably would be Netflix. Netflix is also doing the most on getting Netflix originals out. They're hiring top A-list celebrities to perform, like The Rock, Ryan Gosling, Ryan Reynolds, and much more. So there's a lot of bullish things to be on Netflix. They also just put out that they're going to be putting ads subscription out. So if you want to pay closer to $7 per month or $9 per month, actually says right here, the streaming giant is likely to price the ad-supported subscription to $7 to $9 per month. Bloomberg reported this compares to $15 per month it currently charges for the standard plan, and $19 per month for the premium option. Okay, both the latter options come without any commercials. So if someone doesn't mind commercials and they rather pay $7 per month, if that can increase growth and increase new signups. By the way, Netflix has been cut down all the way to a $99 billion stock, not even a $100 billion company anymore. The PE ratio is 19, which is historically one of the best PE ratios that Netflix has ever had. Also, if we look at their net income, we can see that they're still a positive earning company with $4.8 billion in net income alone in 2021. They're still a positive earning company, and quarter by quarter, they're still profiting $1.6 billion, $1.4 billion per quarter. They might not be growing as much as we want quarter over quarter, but remember, they're still a profitable company. They're turning a great profit, $4 billion profit. The revenue is $29 billion coming in. So the revenue is about a third of the market cap, which is always something we want to see. Whenever you can see revenue a third of what the market cap is, you know you're getting a good deal for a company, especially at a 19 PE ratio. Now, their balance sheet isn't something too concerned to be looking at, but you want to at least track it a little bit, because you want to make sure that they're not spending too much on these actors and these movies, because the business that Netflix is in is a very pricey business with buying actors and movie sets, explosions, you know, so on and so forth. Directors, writers, and everything in between. So their balance sheet isn't the worst. It's only 64% liabilities to assets, but we want to see that getting better and not worse overall if we want to keep our investment for the long term on Netflix. Okay, so we will be revisiting Netflix and all the stocks we talked about on this channel all the time. So make sure you subscribe with post notifications on if you want the updates on these stocks and to revisit to see if they should stay in your portfolio or not. And thank you guys for all the love and support we've had on this channel. Now over 200 new signups just in the past 60 days, which is not a record by any means, but it is a lot of people to take care of. So that's why I have to shut signups down every once in a while. But if you want to see the success stories, click on success number 5, click on success number 4, and read some of these stories for yourself. If you want to even go to the more recent ones, you can click all the way here. You can see it's like 6 weeks ago, 5 weeks ago, 4 weeks ago. We've been having continued success on the close friends list, and I try to post as many as possible. Unfortunately, I can't post them all just because all the success and students that we have. A few more students making over $100. Okay, here we see a student made over 641% gain. Okay, another $100% gain. Here we had a student make over $1,000 on SPY, 166% gain. So whether you have a $100 budget, a $200 budget, or a $1,000 budget per trade, you're still going to be able to make some money with this program. So go ahead and reach out to me. You won't be able to see these green highlights, the close friends list, because that's for members only, but you can see the success number 4, success number 3, and read as many success stories as you want. Thank you guys for the love and support. Let me know what you guys want to see next in the comments below. Share this video with a friend, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.